All right, good afternoon and welcome everybody. Thank you so much for joining us today for NCUA's webinar on the CDFI Fund's Small Dollar Loan Program. I am Allie Lambersky, a Credit Union Training Coordinator here in the Office of Credit Union Resources and Expansion here at the NCUA, and I'll be your moderator for today's program. Before we begin, I do have a few administrative announcements. If you are having problems hearing my voice, please adjust the volume on your computer. If you are still having problems, please use the Q&A feature in the right-hand corner of your console to send us a message, and our tech support team will help you right away. In addition, please allow pop-ups on from this site on your computer. And our webinar will be available in approximately 2 weeks, closed captioned for on-demand viewing on the NCUA's Learning Management System. You'll be able to review our webinar and download a PDF version of this PowerPoint presentation. In order to access the LMS, you do have to have an account with us. There is no charge for the account setup, and it is available to credit unions only. If you need to set up an account, you can do so at the NCUA website by selecting Support Services, then further selecting Credit Union Resources and Expansion, and then selecting our learning platform. Before we begin, I do have a disclaimer that I must read out to you. The materials presented in this webinar are intended as an informative and educational summary of general information on the CDFI Fund's Small Dollar Loan Program. The NCUA has taken reasonable measures to ensure the quality of the data and other information produced by the NCUA that is available in this presentation. The NCUA, however, makes no warranty, express or implied, nor assumes any legal liability or responsibility for the accuracy, correctness, or completeness of any information that is available through this presentation, nor represents that its use would not infringe on privately owned rights. The slides are intended for educational and discussion purposes and do not constitute legal advice nor replace independent professional judgment. Reference to any specific commercial product, process, or service by trade name, trademark, manufacturer, or otherwise does not constitute an endorsement, recommendation, or favoring by the U.S. government or the NCUA. This is our agenda for today's webinar. Christy Kubista-Hovis, Director of Resources here at the Office of Credit Union Resources and Expansion, will give our introductory remarks and introduce our speakers. We will then have our time for a brief Q&A after our presentation, when we will also review our upcoming events. And then I will end the session by providing our contact information. During the webinar, you may send your questions to using the Q&A feature at the bottom of your console. Before we get started, I do want to take a brief moment to have you answer our polling question, just to help us get a better understanding of what credit unions are joining us today. So this is going to ask what asset range represents your credit union. A, 0 to 50 million, B, 51 to 250 million, C, 251 to 500 million, D, 501 to 1 billion, E, greater than 1 billion, and F, not a credit union. All right, it looks like we have a good mix of credit unions here to join us. I hope that you will all find this presentation informative and helpful. I'm going to go ahead and turn the program over to our Resources Division Director, Christy Kubista-Hovis. Over to you, Christy.
Thank you, Allie. My name is Christy Kubista-Hovis. I'm the Director of Resources here at CURE. My responsibility, or my team is responsible for all of the CDRLF grant and loan programs, as well as the training and the MDI programs. It is my happy pleasure to be able to introduce this panel. We do talk, Treasury and NCUA do have regular meetings, and we're excited to be able to help promote and support each other's programs. The first person, and I apologize, of course, there's a dog that there's a person walking past my front yard. But the first person I'd like to introduce is Julie Sandler. Julie is the Associate Program Manager on the Depository Institutions team at the CDRLF Fund, where she works on the Bank Enterprise Award and Small Dollar Loan programs. Ms. Sandler previously worked at the CDRLF Fund as a portfolio manager for the Community Development Financial Institutions program team. Prior to her time at the CDFI Fund, she worked at Calvert Impact Capital as a portfolio associate and risk officer when she was responsible for underwriting CDFIs, affordable housing developers, and social enterprises. She also worked in banking as a relationships manager responsible for business development, treasury management, and credit underwriting for commercial businesses and nonprofits in the Washington, D.C. area. Ms. Sandler's received a BA in International Affairs from George Washington University and an MBA from the University of North Carolina, Chapel Hill. The second presenter is Amy Appetz. Amy is the Management and Program Analyst of the Depository Institutions Initiatives Unit and works with the Bank Enterprise Award and Small Dollar Loan programs. Prior to this, Ms. Appetz worked for the state of Kansas as a program manager, managing federal homeless grants, and as a financial analyst, assisting with the state's indirect cost rates for aging and disabled services. Ms. Appetz has also worked as an affordable housing program specialist at the FHL Bank at Topeka, and she holds a BA in political science and an MBA from Washburn University, Topeka, Kansas. The final presenter, and actually first presenter that will be speaking today, is actually Eddie and I apologize for messing this up, but Tizbulevsky. That's as difficult as my Cubista Hovas. But Eddie is the program manager of the Depository Institutions Initiatives Unit and is responsible for the management of the Bank Enterprise Award and Small Dollar Loan programs. He most recently served as a senior financial analyst at the U.S. Export Impact Bank, where he analyzed and managed a large portfolio of direct loans and loan guarantees. Prior to this, Eddie served as an associate program manager for the CDFI Fund's Capital Management Fund, and he has worked as an economist at the U.S. Department of Housing and Urban Development, as well as the U.S. Department of Treasury's International Affairs Office. He holds an MS in Economic Development from Georgetown University and a BA in Economics and Political Science from the University of Maryland, Baltimore County. With that, I'll turn it over to Eddie. Thank you.
Thank you so much, Christy. First, I'd like to thank NCUA for hosting today's webinar. I'm thrilled to see over 150 participants. Thank you so much for joining. As Christy said, my name is Eddie Tbilevsky. I'm the program manager for the Small Dollar Loan Program, and I'm joined today by the Small and Mighty team. So thank you so much for joining. The purpose of today's presentation is to provide an overview of the Small Dollar Loan Program, talk about the application components. We'll cover important reminders and deadlines and provide relevant contact information. So we have a full agenda today, and then we'll have an opportunity for questions and answers at the end. Next slide, please. So first, let's talk about the Small Dollar Loan Program. It was authorized by the Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010. It's one of many programs within the CDFI Fund, and it helps to support the CDFI Fund's mission to expand economic development for underserved communities. And specifically, it helps CDFIs expand and provide consumer access to mainstream financial institutions and provide alternatives to high-cost small dollar loans. In addition, it assists unbanked and underbanked populations build credit, access affordable capital, and allow greater access into the mainstream financial system. Next slide, please. So let's talk a little bit about our most recent funding round, the FY 2022 funding round. As many of you know, the CDFI Fund awarded $11.4 million to 66 certified CDFIs located in 23 states, the District of Columbia, Guam, and Puerto Rico. There were 3 types of certified CDFIs in that funding round. 22 loan funds received $2.8 million, 34 credit unions received $6.6 million, and 10 banks or bank holding companies received $2 million. So as you can see, credit unions have been quite successful with the program. And I think one of the goals of this presentation is to help you decide if this program could be a good fit for your organization. Out of the 66 certified CDFIs, 17 awards totaling $3.7 million, or nearly a third of the total funds awarded, were made to CDFIs located in persistent poverty counties, or PPCs, which exceeded the congressional mandate of 10%. Next slide, please. So we talked about the most recent funding round. Let's switch gears and talk about the current funding round, the FY 2024 round, which opened on October 20th. As many of you know, the FY 2024 funding round is a double round. The funding amount will consist of $9 million from the FY 2023 appropriations and the FY 2024 appropriations. That amount is yet to be determined. We also wanted to highlight some of the changes for this funding round, including that the minimum TA award amount has increased from $10,000 to $20,000. And when we say TA, we're referring to the Technical Assistance Award within the Small Dollar Loan Program. In addition, the minimum total award amount for loan loss reserves and technical assistance, those are applicants that are applying for both or combo applicants. The minimum award amount has increased from $30,000 to $40,000. And in addition, applicants are now required to submit the Title VI compliance worksheet. It's an online form that has to be submitted in our AMIS platform. We'll talk a little bit more about this requirement, but we did want to flag it. It's a new requirement. Applicants will not be able to submit their application without submitting the Title VI compliance worksheet. Last but certainly not least, for this funding round, applicants are only required to attach their financial statements or call reports for the 2 most recently completed fiscal years. Previously, it was 3 fiscal years. So there's a lot less attachments that applicants have to submit. Okay, so now let's talk a little bit about the Small Dollar Loan Program product requirements. Per our statute, our program grants can be used only to support new and existing small dollar loan programs that offer loans to consumers that are made in amounts of $2,500 or less. They must be repaid in installments. They cannot have a prepayment penalty. And the payments must be reported to at least one consumer reporting agency. And finally, they must be underwritten with standards that consider the consumer's ability to repay. Let's go to the next slide. Let's talk a little bit about eligible uses of Small Dollar Loan Program awards. So this program is very flexible, and the awards can be used for loan loss reserves, technical assistance, or both. So when we're talking about loan loss reserves, these awards can be used to cover potential losses on small dollar loans associated with starting a new small dollar loan program or to expand an existing small dollar loan program. And when we're referring to technical assistance, or TA for short, these awards can be used for technology, staff support, and other costs associated with establishing a new small dollar loan program or expanding an existing small dollar loan program. Please note that our awards, our grants cannot be used to provide direct loans to consumers. Next slide, please. I will now turn it over to Amy, who will take us through the next part of the presentation. Thank you.
Thank you, Eddie. Thank you for inviting us to talk about the Small Dollar Loan Program. Well, Eddie just talked about the eligible uses of awards, so I'm going to give you some examples of successful applications that use the LLR and the TA award. Some examples of successful LLR awards include attracting additional capital to increase deployment. Because of the historic loan loss rates that occur with small dollar lending programs, many investors might require higher reserves, as much as 15%, so they can be used for that. And additionally, you can design a product that might meet the criteria to pull additional folks into your credit unions, folks that might have a lower credit history, a lack of credit history, or lower than average credit scores. And some good examples of using the TA award might be to track the impact outcomes of its small dollar lending program by assessing credit pulls at the time the borrower applied for a loan and 1 year later. Also, it can be used to partner with a technical service company to provide quick processing capabilities and a user-friendly interface for your small dollar lending program product. Next slide, please. Now, award amounts. For the TA award amounts for this funding round, the range is from $20,000 to $150,000. And for the LLR award, the range is from $20,000 to $350,000. And for the combo award, the amount is from $40,000 to $500,000. And as you can see from the slide, this is up to, it also has to do with how much is requested, and up to 20% of the applicant's 3-year projected total to be closed on balance sheet small dollar loans. And as you can see, that's for the LLR award and the combo award. Next slide, please. Applicant eligibility, there's 3 of them. It's a certified CDFI, or partnership between a certified CDFI with any federally insured depository institution with a primary mission to serve targeted investment areas, or a partnership between 2 or more certified CDFIs. Next slide. And the applicant eligibility by award type for the LLR grant, you need to be a certified CDFI or a partnership between a certified CDFI and a FIDI with a primary mission to serve targeted investment areas. For the TA grant, you must be a certified CDFI or a partnership between 2 or more certified CDFIs. And for what we refer to as a combo, that's the LLR grant and TA grant, you must be a certified CDFI. Next slide. Now, there's 9 prohibited practices. So when you're designing your product, keep these in mind. They cannot have any high rate loans, coerced automated loan payments, excessive number of refinancing, loan add-ons, such as credit insurance, security interest in household goods, vehicles, or deposit accounts. There is an exception that loans would have a savings account component or a credit builder loan. Cannot have excessive late fees or missed loan payments. You cannot have abusive overdraft practices or aggressive debt collection practices or forced arbitration clause, class action ban, and other bans on legal remedies. Next slide. And there are 6 program priorities, and those include a product that offers small dollar loan terms that are at least 90 days, use underwriting that considers the borrower's ability to repay in a loan based on both the borrower's income and their expenses, make loan decisions with 1 business day after receipt of required documentation. Next slide. And the last 3 are those that offer a reduction in the borrower's loan rate if the borrowers elect to use automatic debt payments, offers automatic saving features that are built into the regularly scheduled payment on a loan, provided that the resulting payment is still affordable, and lastly, offers access to financial education and credit counseling. And with that, I'm going to give the presentation over to my colleague, Julie.
Hello, hi everyone. So thank you, Amy. Again, I appreciate I was here last year speaking with many of you all, so I'm so excited to be back and see a great number of attendees on this call. So new this year is the Title VI of the Civil Rights Act. So we call, and so all applicants must be submitting the Title VI compliance worksheet. This is submitted to the CDFI fund. So if you are a CDFI FA program, ERP, RRP, you will also need to be submitting this. And Title VI of the Civil Rights Act prohibits discrimination based on race, color, or national origin in programs or activities receiving federal financial assistance from the Department of Treasury. So the Title VI compliance worksheet is submitted through AMIS. So it's separate. So if you have specific questions about it, please reach out to our compliance partners. But this form must be submitted in order for you to submit your AMIS application. So it's something you can do today. You don't even have to start an application. It's something you can do today. And it shouldn't take too much time, and you get started on it right now. Next slide. So this slide kind of goes over what are the application and what we look at. First bullet is the application assessment tool. This really is part of, if you have experience administering federal funds, it's a compliance assessment. The second two bullets are the bulk of the AMIS application. This is where the narrative is. This is where your projections are, the tables are. This is where you'll be spending a lot of your time working. So we want to understand, what are the proposed uses of the award? What are the characteristics of your small dollar loan that the award will support? And if you have a track record, what does that look like? And then the projections, what the small dollar loan program award will support. We also just look at your financial health, key personnel, and management of prior awards. And so all this taken together results in either low, medium, or high risk. Applicants who receive a high risk score will not be considered for an award. Next slide. So I want to spend a little bit of time talking about the tables. This is a really important part of the application. It helps us understand what products you'll be supporting, and it informs what performance goals you will be doing as part if you're lucky enough to receive an award. So table 1 is a section where applicants can provide information on their existing as well as new small dollar loan products that will be supported by an SDL program award. Applicants should ensure the small dollar loan products in table 1 meet program standards and requirements as described in NOFA. So for example, average SDL loan size should be 2,500 or less. Require reporting to credit agencies. And in this, you all please identify the loan products that will be supported by the award. If an applicant has more than 3 loan products, they should identify the loan products that are most similar and relevant to the product that will be supported by a small dollar loan program award. Next slide. Table 2A. So for applicants who do have experience administering a small dollar loan program, this is table 2A. So if you do not have experience with small dollar loans, that's fine. We ask some narrative questions about your plan to launch, but if you do have experience, this is important information for us to review. All data entered in table 2A is based on a 3-year historic review. So for this application, we're analyzing loans closed from 2020 to 2022. The information collected in this table should only include small dollar loans made by your organization that meets small dollar loan program NOFA criteria. Again, this is like the example of the last 3 historic years. The average loan size must be less than 2,500, should be reporting to the credit agencies. For credit unions, this is pretty standard if you have this product, but just wanted to point it out. If an average loan size exceeds 2,500, you'll receive a validation error and you will not be able to complete this application, complete the table or submit the application. So just be aware that we are really focusing on products that meet the criteria as defined in the NOFA. Next slide. So projection. Table 2B should only include projected closed loans that will be supported by the fiscal year 2024 SDL program award. Our team has added data validations to ensure information is accurate and relevant to the award. If you receive one of the following validation errors, you will not be able to complete the application. So again, TA only applicants, the average loan size for the 3 projected years must be 2,500 or less. For applicants applying for a loan loss reserve award or a combo award, the average loan size, again, 2,500 or less. The loan loss reserve percentage for the 3 projected years must be 20% or less than the average of the closed loan amount. And total loan loss reserves amount, so the last row in the table, must equal loan loss reserve award amount request in the application. So that's question 3A. So we only want to see projections that relate to the award. If you're a prior year awardee, we're not looking in this particular table about your whole portfolio. It's just a snapshot of your portfolio supported by this award. Next slide. All right, so the SDL program, a CDFI fund, for most of our almost, I would say almost all of our applications, has a two-step process, 2 separate deadlines, and 2 different online systems. The first is submitting the SF424 form through grants.gov, and the second is submitting the SDL program application through AMIS. So the SF424 form is a document that contains important information about tax and payment information. It's a requirement and starts the process. And the AMIS application is kind of what I talked about a little bit earlier. That's really the bulk of your narrative, projections, the audits are attached there. It's important to note that this year, the Title VI compliance worksheet is included in the AMIS application and will be attached. Our guidance documents talk you through how to attach the form you've submitted in AMIS to the AMIS application. Next slide. Now let's cover award sizing and how it's determined. Award sizes will be based on demand and several factors. These factors include due diligence review by our team, the requested award amount, assessment of the 3-year projected total small dollar loans to be closed. We also review applicants' headquarter location. So the SDL program is subject to a 10% PPC requirement, and award sizes may be adjusted to make sure that awards to applicants located in PPCs equals 10% of the award pool. And we also look at the applicant's risk rating. That plays into the potential award size you are eligible for. Next slide. After award sizes are determined, we move into the assistance agreement, compliance requirements and reporting. So applicants selected to receive an award must enter into an assistance agreement with the CDFI fund in order to become a recipient and receive payment. Additionally, these assistance agreements will have a 3-year period of performance. Terms and conditions to expect in the agreement include but not limited to the award amount, approved uses, performance goals and measures, and reporting requirements. Next slide. So, important reminder, please submit all the required application documents listed in Table 2 of the instructions. This for credit unions will include call reports. Be sure to submit your SF424 in grants.gov by November 20th. And applicants must submit their AMIS application by December 20th, so getting in right before the holidays. You're only allowed one fiscal year 2024 SDL program application. We do encourage all applicants to submit the application at least 3 days prior to the AMIS application deadline in case there are validation or technical issues arise. Next slide. So these are important dates. And at this point in the funding round cycle, most important date is making sure that you have your SF424 submitted through grants.gov. So please make sure you've updated your SAM account. Also at this time is when you should be ensuring that your EIN and UAI are updated in both your AMIS account and your SAM.gov account, because we look to make sure that they are aligned. And then from there is December 20th is when the AMIS application is due. And then the last slide. We've thrown out a lot of information at you, and we have a lot of research on our website, but if you do have questions, please do not hesitate to reach out. We encourage you to submit a service request through our system that we refer to as AMIS, but we are also available by voicemail and by the phone. So if you have a specific question related to Title VI compliance, please reach out to our OCME, which is Office of Compliance Monitoring and Evaluation. If you have a technical issue, please reach out to IT. And of course, if you have an question about the application, please reach out to us. And with that, I will pass it back to Allie. And thank you so much for your time.
Thank you so much, Julie, and thank you again to Amy and Eddie as well for sharing this information with us about the small dollar loan program. As you guys were presenting, we did get a few questions that came in, so I am actually going to turn it over to one of my partners, Ron, to go ahead and share those questions with you.
Great. Thank you so much, Allie. And I want to thank our speakers once again. Great job, Julie, Amy, and Eddie, for the wonderful information you shared with us. So yes, we do have some questions that did come in. The first couple came in and they were directed towards Amy. It was during the time that Amy was speaking and what she was talking about. So the first question is, can CDFIs also partner with a 501c3 nonprofit as part of the program concept as well?
Well, I want to say no, but I also want to refer that to Eddie to check me and make sure I'm correct on that.
Sure. So thank you for that question. So the way that I'm reading this question is a CDFI plans to apply by itself, but then it would like to partner more informally with 501c3. So please note in that situation, the recipient, the certified CDFI that is applying for the award, that organization would be required to carry out the primary activities in the application, and it would be held to the requirements in the assistance agreement. So it's the agreement is between the recipient and the CDFI fund. So while the CDFI could potentially partner with another organization, it would be the recipient, the certified CDFI, that ultimately has to execute and meet all of the performance goals that are outlined in the assistance agreement.
Excellent. Thank you, Eddie. The next question that also came in directed towards Amy is, can we add debit protection, unemployment protection to a small dollar loan?
So is that insurance? Like
Yeah,
unemployment?
I think they typed debit, they might have meant debt protection. I think it was a misspelling.
Yeah, I don't want to misspeak on this one either. So, Eddie, what are your thoughts on that? I'm thinking if it's any sort of insurance, I think that's a prohibitive practice. If that's what that is.
Yeah, and that's something that we would want to check with our Office of Legal Counsel. So I think that's one of those specific cases that we'd like to confirm before we respond. We can take your information and follow up after the presentation just to make sure that we can confirm with our Office of Legal Counsel before responding.
And I would just add, Amy talked about the prohibited practices. There's more detail within the NOFA, a kind of we say like no arbitration clause, but then we spend a little bit more time, we'll reference like jury waiver, like that's included in it. So definitely encourage you to look at the NOFA as well. There's a little bit more detail there and see if that matches what you are proposing.
Very good. Thank you. I'm looking, I think this question came in, Julie, while you were talking. When you say that the grant can't be used for high rate loans, what is your definition of high rate?
Yeah, and this is something we talked through. So we state that it is either 36%, the lesser of 36%, or whatever the max rate for consumer lending per your state regulating entity. So 36% is the benchmark, but we know like states like Arkansas is 17%. Some states don't have it, but it is kind of a state by state where you will be operating basis, but not above 36%.
Very good. Thank you. And we have a few more questions. Let's see, I'm reading through them real quickly. Can you share, and I'm not sure which one of you want to answer this, Julie, this may have been directed towards you. Can you share a timeline of the application? So from the time that the person submits the application in the review process, what does that look like?
Yeah, we will be announcing small dollar loan awards in the spring. So we won't give a specific time, but we will be announcing in the spring after you submit December 20th.
Great, thank you. And another question we got is, what is the risk rating level system that determines award size? Are you allowed to share that?
So if I understand the question correctly, you're basically, the question is about how do we determine the award size as part
Yes,
of the internal review?
exactly.
Yeah, so I would, that's an excellent question. I would refer you to our NOFA, which outlines the evaluation criteria, and it talks about the different factors that are considered in determining the award size.
Okay, great. Thank you. Our next question is a very practical one, and it is, what if the applicant makes a mistake and wants to resubmit their application? Is it possible to do that? And if so, how?
I can take this one. So once the AMIS application is submitted, it is locked, and the applicant would not be able to edit or modify the application in any way. So before you submit your AMIS application, please verify and confirm that everything is accurate before submitting the application.
Thank you very much. Our next question is about the TA grant or loan. It says, could the TA be used to implement a third-party vendor for artificial intelligence lending, for AI lending, artificial intelligence?
Yeah, so that's a good question. I think the TA uses, technical assistance, those categories have to be consistent with the Uniform Administrative Requirements, the UAR. Those categories are pretty broad, but generally, as long as the technical assistance, as long as those costs support expanding or creating a new small dollar loan program, in most cases, those would be considered eligible uses of TA. For specific questions, I would recommend that you submit a service request and we can look into it and confirm. But the NOFA and the UAR provide a lot of guidance in terms of the eligible categories for technical assistance, and they're pretty broad.
Got it. Thank you so much, Eddie. Our next question is, how can individuals or organizations support credit unions that are certified CDFIs?
Julie, do you want to take that? You want to take that question? I'm not sure I even understand the question.
Yeah, I'm not sure I totally understand that question as well too, but I mean, we at the CDFI Fund, like, our role is to support certified CDFIs with grant funding. So our particular role is supporting CDFIs who want to be expanding or growing their small dollar loan programs. So I would say that is our role. Individuals, I don't know if I want to get into it, but there's lots of different ways to engage with the CDFI industry.
Yeah, and I think you're right, and it's very similar to this other question that we got, and that was, how can organizations collaborate with the CDFI Fund to maximize their impact? So I think what the questioner is trying to ask is exactly that. What is the best way to maximize the impact of the CDFI Fund for either individuals or credit unions in terms of working with other CDFIs? I hope that's clearer.
I mean, I think just CDFIs are just good partners. That was a little background. Are good partners where they are based. And so I think Amy kind of touched upon, and Eddie kind of touched upon it, like referring individuals and businesses to CDFIs. But I don't know if we are in the position to exactly answer that question.
Understood. I'm looking through the Q&A. I want to make sure I didn't miss any. Give me just a moment. Okay, here's a question that we just received. We don't have a specific SDL loan yet and are looking to create a new one with this application. But we do have a track record of lending personal and disaster recovery loans to our members, and many of those are less than $2,500. Do we fill in table 2A with the delinquency info of those personal and disaster loans with original loan amounts less than $2,500? Or do we skip table 2A because we are creating a new SDL product?
I can try to answer that. Thank you, Ron. Good question. So table 2A is a track record table. It's a track record specifically of small dollar loan products that meet the definition and criteria of the small dollar loans as defined in our NOFA. So if if your credit union has a track record providing loans that meet that criteria, then you would enter information in table 2A. But if not, in question 10 of the application, one of the questions will ask if you have track records with other types of small dollar loans. And that's where the applicant can enter relevant information to discuss any track record for loans that don't meet the definition of the small dollar loan program per the NOFA.
Thank you, Eddie. And this may be our last question, as I don't see any more unless one pops in, but this one is about the SF424 form. And the question is, there are several to choose from: family, individual family, mandatory family, and short organization family. Which do we select?
Julie, do you want to take that one?
It doesn't matter.
Okay. So in our application instructions documents, we provide specific guidance on how to complete the SF424 form. I'm not sure which question that specifically is referring to, but yeah, either way, that question, it doesn't really matter for SF424 purposes. The most important information on the SF424 is the organization's name and the UEI, right? Because that is what is being used to match to the Amos org accounts that the applicant will need to create. So some of those questions on the SF424, you can use the guidance to complete, but they're not critical to your ability to submit the SF424. And again, I would just refer to the application instructions document, and you can find all of the application materials on our website. If you go to cdfifund.gov and click on the small dollar loan program, and then go to step 2, and you will find all of the information there.
Thank you, Eddie. And this next question that just came in is one I had expected earlier in the Q&A. And that question is, what is the process for becoming CDFI certified?
Yeah, that's an excellent question. And, I would refer all of the CDFI certification questions to our amazing CDFI certification team, which is led by Michelle Dickens. Unfortunately, I can't really provide more information on the certification process, but that team will be able to support you. And in general, the earlier question about, how can credit unions partner better with the CDFI fund? I think one of the best ways is to become CDFI certified, because that makes the organization eligible for different types of grants and awards provided by the CDFI fund. And the certification team can provide specific instructions for how to submit the CDFI certification and application and address all of the certification related questions.
Yeah, and Eddie, on that last slide that we presented, the contact information on how to get a hold of them is on there, if that's helpful for folks.
Great. Thank you. Yes, excellent. Thank you, Amy, because I was going to ask that. And actually, that helps. We do have another question I'm going to ask you in a minute, but your comment, both of you, what you said helps me answer a few questions that we got, which was about the slide deck. So as Ali mentioned at the beginning, this recording, as well as the slide deck, will be on the LMS in about 1 or 2 weeks. And so you will, unless the CDFI fund has any restriction on us sharing the PowerPoint deck as a PDF, it will be up on our learning management system so that they can see that contact information as well as the slides that you presented. So the next question is confirming that credit unions that are looking to launch a small loan plan and portfolio are also eligible to apply now.
I'm sorry, you said they're looking to launch what?
Launch a small loan amount plan and portfolio.
Okay, so yeah, as long as it meets the definition of the small dollar loan as defined in the NOFA, then the organization would be able to submit the application. I'm not familiar with the specifics of this loan product, but specifically for the SDLP program, there are a number of requirements that must be met, and those are outlined in our NOFA.
Very good.
And I would
Thank
just
you.
add to add that question, you must be a certified CDFI credit union at this time. So this is an ongoing program. If you aren't certified at this time, we're glad we're reaching you now so you can be aware of if you do become certified, you can apply to this program in future years, but you have to be certified at this time.
Yeah, thank you, Julie. And as you all mentioned, they need to reach out to the certification group at CDFI, and that info is on the deck of slides, which will be, like I mentioned, a part of this presentation when it's loaded on the LMS. And I also want to mention that we actually have over 200 other courses on our learning management system. So if anyone listening to this webinar and is with a credit union, whether you're an employee or volunteer, you can have an account that doesn't cost you anything on our learning management system, and you can access the recording to this webinar as well as other training. Like I said, we have over 210 courses right now. So I don't see, Ali, that we have any more questions. I'm looking through to make sure I didn't miss anybody. So I am going to turn it back over to you, Ali. And I want to thank our panelists again for answering our questions.
Thank you so much for having us. We appreciate it.
Thank you so much, Ron, for facilitating that Q&A. I am very excited by the amount of questions that we had. I hope that everybody found this presentation very informative and very helpful. Thank you, Eddie, Julie, and Amy for joining us, as well as answering our questions from our participants. Like Ron mentioned, we do have over 210 courses on our LMS. So while our next webinar is not going to be until January 4th, 2024 on the CECL tool, in the meantime, please take advantage of our learning management system. It is a free resource to be able to find valuable information as well. I also just want to take a moment to give a great shout out to our support team today, Ron for facilitating a fantastic Q&A session, George and Gerardo for assisting with the presentation, and as well as my director, Christy Kubista-Hovis, for a fantastic intro. I'll go ahead and share some contact information for our departments as well right now. So this next slide that I'm showing contains information on the Office of Consumer Access. It will contain information on phone numbers and email addresses for questions regarding chartering, as well as field of membership expansion. And the next slide we'll share will actually be the contact information for our department, the Office of Credit Union Resources and Expansion. If you have any questions regarding CDFI certification, grants and loans, learning, or just general inquiries, please feel free to contact us using these email addresses and phone numbers provided. Thank you again, everyone, for your time and attendance. I hope that you really enjoyed this session and look forward to seeing you all again on future webinars. Have a great rest of your day. Thank you so much.